And again, a reminder, use risk capital you can afford to lose. This is a perfect illustration of that 15-minute chart that I said I'm going to watch the 10 and 15 because I think they're in play. These are normal charts that we look at. And I said pre-market that you could see where this was digging in, trying to hold, right? This was trying to hold the green and the red and the blue lines. And I said, we're going to be watching this because this will give us some targets. And you can see where that is played out already for the very first long side swing to test resistance. And that's the beauty of combining a couple of charts like this and the RTH chart. And sometimes these will absolutely fool you, and they'll go screaming through them or whatever, like yesterday. You know, you can't just trade by moving averages, but it gives you a guide because over time you're going to find certain things that work. Others like 30 and whatever. But we start with something like, remember we started with a 5, right? Started with our 5 and we said, okay, but I think we need to look at the 10s and the 15s. So this look helped us to see the idea of the fast chart still trying to climb and not be inhibited by this. And after time, you get to see and understand, okay, so you got to do the 5s, you got to do the 10s, you got to do the 15, okay? So this chart, because it's our base chart, meaning this is the one I give a lot of confidence in for day trading, I want to make sure that I'm paid coming into this target. We can look at a 30-minute chart and say, all right, so it looks to me like 30-minute chart agrees that you better be paid by 22s, and that's why that area is our resistance. First time back. Look at our support. So this helps back up the levels in a timing basis. And you know, obviously way too much in any one bar with absolutely no resistance built up. So this is the knife. This is the bear jumping out the window, and this is the bull starting to climb the stairs. Look how many bars are involved here versus this one bar. And these are the type charts that Charlie needs to look at rather than just say, okay, I'm shorting today because I think today, you know, we got morning after trend day. You know, you need to be patient. You need to understand that it's a two-way day, probably. Could be one-way day, but I'm not counting on that. I think it's two-way day. And I said this morning, the odds are just as good for the longs today as for the shorts. Anybody that is shorting, we have advised, think about small rotations for now. Don't overthink this. This currently is whack-a-mole, making higher highs, higher lows. It's a good chart. Pay attention to your 15s and your 30s as a day trader. And over time, it'll help. Remember how this started to bleed through here? We said over, and under, and we went to a 60-minute chart. Right? Said, let's take a look at a 60. Well, here we are. We're bumping into this blue line. So I like the 15-minute chart the best right now. And that's one we're going to keep an eye on. And you can do these with 120s and everything else too, by the way. So look how good this chart has been in terms of our support, in terms of this 14 idea, and then obviously the next target right here. So this is like a hidden pivot chart. And yesterday, very, very helpful in terms of understanding the length of this move and potentially where we could stop. Keep an eye on NQ today. That's rocking and rolling. We want to keep an eye on which one is lying, if either of them are. Anyways, this is typical of day after this kind of a trend. You do get morning after trend day idea, but typically a little bit later is often better, which I've coined AATD, afternoon after trend day, meaning give it a little time, let the early aggressive shorts get beat up, and then look for a common sense trade. And if you're really an aggressive trader and believe that we're going to be punching this way, then you should be playing alongside instead of just waiting for it to get there. A fellow I studied with said, waiting to enter is losing. So if you think it's going to hit 22 or 21, then you should be buying support to try to get some shekels in that direction, and then turn your mind around and say, okay, far enough. I think the odds are better coming this way now. That is very hard to do. That's easy to say, but much harder to do. And I'll be the first to admit that. But that's the theory. My friend Anthony, he put out a post I remember seeing about execution. He's absolutely right. But first, you need to understand the concepts. Without understanding trading concepts, you're just flying blind. If you just stand there with a kite, and have no clue which way the wind is blowing, then, you're near trees and everything, you're going to make a mess. You got to learn the concepts, then learn how to execute the trades and take advantage of what I believe are better opportunities. So anybody that tried to short too soon, say, yeah, let's get in. We said, be patient. Second or third mouse today will probably get the cheese. And I like yesterday, look at the boxes. 1, 2, 3, 4 boxes, four plus boxes. So 2 boxes back gives us, just count them up. So, okay, so the odds are we're getting closer to where better take profits. 4 down, 2 back. That's the beauty of a system like this, and it's simple.